Imagine starting a local charity, right? You want to clean up a public park.
Okay, a noble cause.
Yeah, exactly. And you tell the city, you tell the public that you are just this humble volunteer.
Right.
But then fast forward 4 years and you are sitting in a federal court. And it turns out you personally own the land the park is built on.
Wow.
And not just that, your private stake in that land is worth $30 billion.
Yeah, that's going to raise some eyebrows, to say the least.
It's just a few. But today, that exact scenario is basically playing out at the very top of the artificial intelligence industry. So welcome to the deep dive. Today is Monday, May 4, 2026.
And if you really want to understand where artificial intelligence is going, you have to look past all the neural networks and the tech jargon, and you just have to follow the money.
Completely. And that is our mission for today. We are pulling all our material today from the latest Tech Reader AI Digest that's penned by Aaron Rose.
Right. And the goal here is to map out the hidden wiring of the AI industry. Because, what Rose's Digest reveals is how personal wealth, intense courtroom battles, and these just massive billion-dollar shifts in corporate strategy are all colliding.
At exactly the same time.
Yes. And it's going to fundamentally change how AI is actually used in the real world. You can't just look at tech announcements in a vacuum anymore. You need the big picture.
Okay, so let's unpack this. Because to map that hidden wiring, we have to start by looking at the drama unfolding right now in a federal courthouse.
Oh, it is pure drama.
It really is. We are in the 4th day of this massive trial against Elon Musk. And Greg Brockman, the co-founder and president of OpenAI, he just took this stand.
Which everyone was waiting for.
Right. And the defining number of the day, the figure that just sucked all the oxygen right out of the room, was 30 billion. Brockman actually had to disclose that his personal stake in OpenAI is worth nearly $30 billion.
And you have to understand, that 30 billion, it's not just some fun trivia fact for a billionaire wealth ranking.
Yeah.
That number is essentially the structural load-bearing beam of the entire legal argument against the company's nonprofit origins.
So picture this scene. You have Musk's attorney, Stephen Mollo, and he is just hammering this 30 billion figure.
He brought it up constantly, didn't he?
More than a dozen times over 2 hours of questioning. And he corners Brockman with this hypothetical. He asks, basically, and I'm paraphrasing here, he says, do you think, sitting here today, given that you're good with $1 billion, do you think you should give the $29 billion back to the charity?
Which is just a brilliantly engineered question for a jury. I mean, it forces the executive to verbally weigh his massive personal wealth right up against the stated philanthropic mission of the organization he founded.
Exactly. And Brockman's reply was just, that's not how I think about it.
Which is not what a jury wants to hear.
No. And later, Mollo pushes him again. He says something like, it takes 30 billion to get you out of bed in the morning, but 1 billion doesn't get you out of bed.
Brutal.
Yeah. And again, Brockman just says, that's not what I'm saying. You can really feel how heavily that lands in a courtroom setting. But the real smoking gun, at least according to the Digest, it actually comes from Brockman's own journals.
Ah, the handwritten journals?
Right. In these entries, Brockman explicitly aspired to a personal wealth of $1 billion. And crucially, he called the nonprofit commitment, quote, a lie.
Yeah, and those journals, they introduce this level of premeditation that is just... it's very difficult to defend against in a fiduciary context.
Let's define that real quick. Fiduciary duty.
Sure. Fiduciary duty basically means you are legally obligated to act in the best interest of the entity you serve, right? Not yourself. So if your own private diary says the entity's mission is a lie, well, the jury's going to start looking very, very closely at your other financial incentives.
Which brings us perfectly back to that volunteer firefighter analogy. If you start an organization to protect the public trust, you get special tax status. You get public goodwill.
Right.
But then the public finds out you own the reservoir, your stake is worth $30 billion, and your diary says being a volunteer was a lie. It completely shatters the foundational premise of everything.
What's fascinating here is just the fundamental clash of narratives, especially around that fiduciary duty. Because this trial has introduced something lawyers are calling the allegiance email.
Oh, this was wild.
Yeah. Cross-examination revealed that Brockman has deep financial ties to Sam Altman's family office.
And just to clarify for everyone, a family office is basically a private wealth management firm. It serves ultra-high net worth individuals, so their personal fortunes are co-invested together in other projects.
Right, and that commingling of funds, that is the core issue here. This allegiance email, which, by the way, was entered as Exhibit B for fiduciary breach, it comes from the head of Musk's family office.
Okay.
And it explicitly warns that because of these outside financial arrangements, Brockman would have, quote, a greater allegiance to Sam than to the nonprofit mission.
Because their money is all tangled up together outside of OpenAI.
Yeah.
Brockman holds stakes in Helion Energy, in Cerebras, and in Altman's family office itself. So the jury is being asked to weigh a very specific, uncomfortable question. Were the leaders of this organization serving the stated mission, or were they serving their own deeply entangled, multi-billion-dollar financial interests?
It's a tough look, but, we do have to be completely impartial here. The context around Elon Musk in this trial is also incredibly messy.
Oh yeah, very messy.
Musk isn't just standing there as some wronged, altruistic benefactor. I mean, he is a direct, fierce competitor.
Which was heavily established in court. Musk actually had to acknowledge on the stand that his own company, XAI, had distilled OpenAI models.
Right.
And distillation, what exactly did Musk admit to doing there?
So think of distillation like a master chess player generating 1 million perfect games, right?
Okay.
Then a novice AI simply memorizes those specific games so it can look like a master. It does this without having to spend the time and the massive computational power to actually learn to test from scratch.
Shortcut.
Exactly. Musk admitted XAI used the high-quality outputs from OpenAI's stronger models to essentially train their own competing models. So that significantly muddies the waters of his real motivation for the lawsuit.
Not to mention the rejected text exchange from just 2 days before the trial started.
Oh, the text messages.
Yeah, Musk texted Brockman to basically gauge interest in a settlement.
Right.
And Brockman counterproposed that both sides should just drop the claims against the individuals.
And Musk's reply was just straight out of a movie.
It really was. He wrote, "By the end of this week, you and Sam will be the most hated men in America. If you insist, so it will be."
Which is just intense.
Yeah.
And the judge actually ruled that text inadmissible, but OpenAI's lawyers went ahead and filed it publicly anyway.
Just so the world could see the underlying animosity.
Exactly.
And we really can't forget the scale we are dealing with here. They are hammering Brockman over $30 billion, but Musk's own net worth is estimated at $657 billion.
It's just a clash of titans. And the stakes are not just financial. They're foundational to the future of the entire industry.
But, there is a very specific detail from Brockman's tangled financial interests that we really need to pull on right now, because one of those outside stakes he holds is a chip startup called Cerebras.
And by sheer, almost unbelievable coincidence, today is the exact day Cerebras filed for its massive IPO.
The timing is theatrical.
It really is.
Cerebras Systems just filed for a NASDAQ listing.
Yeah.
They are aiming to sell 28 million shares at $115 to $125 a share. That's raising $3.5 billion.
Which values the entire company at $26.6 billion.
Right, and that is up from $23 billion just in February. And they actually have real numbers behind this. Q4 revenue was $510 million, which is up 76% year over year, with a net income of $87.9 million.
Those are very robust numbers for a hardware-turned-cloud service company. But the public market isn't just buying past revenue, right? They are buying the underlying mechanism of how Cerebras competes with NVIDIA.
And that's wafer-scale silicon, right?
Exactly.
I've seen that term all over the digest today. How is a wafer-scale chip actually different from what NVIDIA does?
So traditional chip manufacturing takes this large circular silicon wafer and it slices it into dozens of smaller individual chips. They're about the size of a postage stamp.
Okay, pretty small.
Right. And NVIDIA wires thousands of those individual chips together.
Yeah.
But Cerebras looked at that and basically said, what if we just don't slice it?
Just leave it whole.
Yeah. Their chip is roughly the size of a dinner plate. They use the entire massive, unbroken wafer as one gigantic chip.
Wow.
The theory is that keeping all the processing power physically connected on one piece of silicon drastically reduces the bottleneck of moving data around. And that drastically speeds up AI inference, which is the actual running of the models.
But to prove that technology works at an enterprise scale, you need a massive buyer. You need someone to take a bet on it.
Yes.
And that brings us to the $20 billion deal. Cerebras just landed this multi-year deal with OpenAI for up to 750 megawatts of compute capacity. And that is valued at over $20 billion through 2028.
This deal is the anchor. The entire $26.6 billion valuation of Cerebras is intrinsically tied to this single massive deal.
Okay, I have to play the skeptic here for a second.
Go for it.
If I'm a regular retail investor looking at this IPO today, I'm seeing that Greg Brockman has a personal financial stake in Cerebras. At the exact same time, OpenAI, where he is the president, just committed $20 billion to them.
Right.
That commitment effectively makes OpenAI their anchor customer right before they go public for $26 billion. I mean, isn't that an incredibly tight, closed loop of money?
It looks very circular.
It feels like the money is just moving from one pocket to another within the exact same pair of pants.
So if we connect this to the bigger picture, it explains exactly why the S1 IPO disclosure and the trial record are colliding today. The public market now has to make a very difficult decision.
Which is?
They have to decide if a $26.6 billion valuation is genuine, objective validation that wafer-scale silicon is the true successor to NVIDIA, or if the public market is simply being asked to price a company for a future that hasn't arrived yet. A future heavily propped up by a single $20 billion awe from a company whose president just happens to be an early investor.
That is a massive distinction.
It tests the absolute limits of market confidence in these tightly knit tech ecosystems.
But there is a huge financial trapdoor here. You do not sign a $20 billion compute deal with Cerebras unless you have a guaranteed way to squeeze, $40 billion out of your enterprise customers.
Exactly.
And selling them a $20 monthly subscription or a standard API chatbot, that isn't going to cut it anymore.
Not even close.
Which is exactly why Anthropic and OpenAI are completely blowing up their business models today.
The financial structure always dictates the business model. To justify these astronomical hardware costs, the entire enterprise strategy of the AI industry is pivoting simultaneously.
Let's look at the digest. Anthropic just launched a $1.5 billion enterprise joint venture. And look at the founding partners: Blackstone, Hellman and Friedman, and Goldman Sachs.
That is serious capital.
Oh, it's backed by Apollo, Sequoia, GIC. Anthropic is putting in $300 million. Blackstone and Hellman are putting in $300 million each. And then, literally hours later, Bloomberg reports that OpenAI is doing the exact same thing.
Following suit.
Yeah, they are raising funds for a venture called the Deployment Company, raising $4 billion from 19 investors at a $10 billion valuation, including TPG and Bain Capital.
The copycat pattern is fully institutionalized at this point. One moves, and the other counters with a larger scale but an identical structure. But the more important detail here is why they are partnering with these specific financial giants.
Right. Why private equity?
They aren't just taking money from firms like Blackstone or TPG for the cash. They're partnering with them because those massive financial firms actually own hundreds of traditional non-tech companies.
Ah, I see. It's an instant captive customer base. If you partner with Blackstone, you suddenly have this warm introduction to integrate your AI into all the massive logistics, healthcare, and real estate companies that Blackstone already owns.
That is the strategy. Anthropic CFO Krishna Rao explicitly stated that demand for their Claude model is, quote, outpacing any single delivery model. So the solution they are rolling out is called forward deployed engineering.
Here's where it gets really interesting, I think, because up until now, the business model for AI has mostly been selling an API, right?
Yes, mostly.
And selling an API is basically like dropping off a giant crate of highly complex, disassembled car parts at the front door of a business and saying, good luck, hope you build a great car.
Good luck with your IT team.
Exactly. But forward deployed engineering, that is like moving a team of master mechanics directly into the business's garage to build the car with them, custom fitted to their exact needs.
It is a massive departure from the software as a service model that tech companies usually love.
Yeah, they usually hate providing services.
Right. Traditionally, software companies want 90% margins with zero human labor. You build the software once, you sell it 1 million times over the internet.
Yeah.
What you're describing now is the Palantir model.
Palantir?
Yeah, Palantir built a $90 billion company not by selling off-the-shelf software, but by using forward-deployed engineers to solve bespoke, highly complex problems for governments and large enterprises.
It's a huge concession, really. AI companies have to hire armies of human engineers to integrate the AI because the AI isn't smart enough to integrate itself into a hospital yet.
Exactly. And both Anthropic and OpenAI realizing this simultaneously, it is the most significant strategic convergence of the month. The era of just selling API enterprise access is effectively ending. You need the mechanics in the garage.
So if you're an IT director listening to this right now, this means you're going to have private equity-backed engineers knocking on your door next quarter, asking for direct access to your company's deepest data lakes.
They're going to want everything.
Right. So what does this all mean? The push for autonomous agentic AI isn't just happening because the tech is ready. It's happening because OpenAI and Anthropic are on the hook for tens of billions in compute costs.
Which they have to pay for.
Yes, they are forced to build agents that can replace human labor because that is the only way enterprises will pay them enough to cover their massive server bills.
And that financial structure is directly dictating the cybersecurity risk.
Entirely.
Because when you embed those mechanics and you give the AI direct access to the deepest systems of an enterprise, you introduce a whole new class of danger.
Right. If we are embedding these advanced AI models deeply into enterprise workflows, giving them direct access to hospital records or financial systems or IT infrastructure, what happens when the AI starts acting on its own?
Well, we got a very stark answer to that question today from the global intelligence community.
We did. The cybersecurity agencies of the Five Eyes, so that's the US, UK, Canada, Australia, and New Zealand, they issued a joint warning.
A major one.
Yeah, they urged organizations to treat agentic or autonomous AI systems as highly security sensitive, especially when these systems have access to tools, data, or production environments.
And they explicitly cited an incident from last week, the Pocket OS database deletion, as the exact nightmare scenario.
Let's explain how this actually happens, right? Because people hear that and think, how does a chatbot delete a database?
Because an agentic AI isn't just typing text into a chat box. It is given the ability to use tools through API calls. It's being given the actual login credentials and execution permissions for a company's systems.
Oh, it has the keys.
It has the keys. If an AI is tasked with optimizing a database and it hallucinates a line of code, it doesn't just print a wrong answer on a screen for a human to read. It executes that code.
Oh, wow.
So if it has authorization to drop tables, it will wipe a server in a fraction of a second.
No.
The Pocket OS incident proves this isn't theoretical anymore.
But then, right next to this blaring siren from global spy agencies, we have the developer ecosystem moving in the exact opposite direction.
Right, the open source community.
Developers are pushing for more freedom, more local control. Ollama 0.23 just launched today.
Integration there is significant.
It's massive. It allows developers to pipe all models from Ollama's cloud directly into Claude Cowork and Claude Code from the Claude desktop. So developers are getting incredible local agentic flexibility.
Which they love.
They want tools that run on their own hardware, giving them absolute control to plug any model into their workflows. But it's this crazy dichotomy. On one hand, developers are celebrating this freedom. On the exact same day, the top spy agencies in the world are warning that these autonomous agents can literally delete your company's entire production database.
This raises an important question about the fundamental nature of cybersecurity going forward. As AI moves from a passive tool, where you ask a question, it generates text, to an active embedded agent, thanks to those forward-deployed engineers we just talked about, the entire security paradigm has to shift.
We have spent the last 2 years obsessing over what the AI says.
Right. Is it biased? Is it hallucinating?
Exactly. But as we give it the keys to the enterprise, it's no longer about what the AI says. It is entirely about what the AI can do.
The blast radius expands from a bad text output to a deleted corporate infrastructure. Developer tools like the Ollama integration are accelerating what the AI can do, providing incredible efficiency. But the Five Eyes are warning that most corporate security architectures were built for human employees.
Who operate at human speed.
Right. They were not built for autonomous software agents that can execute thousands of commands a second.
It is a dizzying amount of movement for one day. Let's quickly recap the through line of this deep dive because it is all a chain reaction. We started in a federal courthouse looking at a $30 billion battle over fiduciary duty, personal allegiance, and whether the nonprofit mission of OpenAI was a lie.
Which revealed the deeply intertwined financial interests of its leaders.
Which led us straight to a $26.6 billion IPO for Cerebras, a chip company heavily propped up by a $20 billion compute deal from OpenAI, a company whose president holds a stake in Cerebras.
A compute deal that demands massive enterprise revenue to justify.
Exactly. Which is why both Anthropic and OpenAI are completely abandoning the passive API model to partner with private equity giants. They are raising billions to build armies of forward-deployed engineers to embed AI directly into businesses.
And all of this is happening while global cybersecurity agencies are screaming that embedding autonomous agents into production environments could result in catastrophic database deletions.
It is a profound structural realignment of the entire ecosystem.
It really is. And it leaves you with a final thought to chew on. If you look closely at all of this, the courtroom disclosures, the IPO anchors, the joint ventures, you see the exact same small circle of executives.
Yeah, it's a very tight circle.
They are simultaneously the investors, the chip buyers, the model builders, and the enterprise deployers. So are we witnessing the birth of a vibrant new technological era, or are we just watching the construction of the most tightly closed, impenetrable corporate ecosystem in history?
Wow. The volunteer firefighter didn't just end up owning the water supply. He owns the pipes, the fire engines, and the company that builds the houses. It's a lot to think about. Thank you for joining us on this deep dive into the hidden wiring of the AI industry. Keep questioning the black box, and as always, stay insanely curious.